Well, thanks everybody for joining us. We're really pleased to have what is a reasonably big crowd for a blockchain event. They seem to fluctuate. Wasn't really too sure how many we'd get. And I think we had one sympathy attendee at least who looked at the meetup group and saw 4 people there and decided to try and add to the attendance, so thank you.
I came a long way.
Yep. Yeah, but we did promote across 3 different channels, so it might be a bit confusing at times. This is the first of what we're hoping to do like a monthly event focusing on really showcasing the work that people are actually doing in blockchain. Guy, we should speak to you about being on the agenda as well, because you're certainly somebody out there who are doing stuff. Because I think we're really at a point where we need to transition the conversation away from respectfully crypto assets and get-rich-quick schemes and is this actually a thing, into conversations around what are actually people doing, what are the use cases for it, what are the real challenges and opportunities that we're starting to work through. So we're really lucky to have Joni here tonight. She's one of the leaders in Australia and probably globally as well in the tax and crypto space, but I'll let you introduce yourself in a moment. The theme of the night is, which I've been thinking a lot about, what's the one message that we want to leave you all with? And I think the question is, the closest question I came to is, will regulations save the banks? And that's where I'll ask Joni to pick up in a second. So one more piece of narrative, I guess, that we're thinking about at Type Human is that we're really seeing a lot of similarities in the banking sector as what we saw in the music space around about the Napster days. The record producers held a monopoly around distribution of music, CDs and records, a story that most of you have already heard before. And when we look at the banking sector, the banks, if we were to project into the future and see a crypto issued by central banks, the banks look a lot like the same. And that's where I'm going to throw to Joni. So Joni was in Paris earlier this year at the OECD Blockchain Policy Forum.
Yes.
And some of her observations there is kind of what triggered the purpose of tonight. So who are you, and what are you seeing in the space right now?
Do you want this on?
Can everyone hear me okay?
Yes.
Yep.
All right.
Yeah.
Great. So Joni Pirovich, I've met most of you before, so good to see a lot of familiar faces. I guess I got into blockchain and cryptocurrency a couple of years ago, and it now is sort of something that I live and breathe with the tax work that I do day to day, and it's evolved into more policy work with obviously the Treasury releasing their ICO review earlier this year, and I work with John Basilios, and we together put a couple of submissions in to guide what the regulatory framework could or should be in Australia to support the responsible adoption of blockchain and digital assets. But fast forward, I think we're even delving deep into smart legal contracts. So a lot of work in our legal and tax day to day, as well as educating government, which is becoming a big overhead of our businesses, and trying to come up with good policy frameworks that are future fit for a digital economy. And I know I've tried to put pen to paper a lot of times, and it's quite difficult. And so I guess the policy work and interest extended to being an Australian delegate to the OECD Blockchain Policy Forum, which was in September this year. It was the second time that it's run, and it was just amazing because I met people from about 15 different countries in the first day. It's a 2-day event, and they're all at different stages in the experimentation or adoption of blockchain and cryptocurrencies. So
when you say they, like who do they represent?
Well, there was people all across Africa, Lithuania.
Central banks, private sector, government.
Central bank representatives, government representatives, and enterprise, but also a lot of lawyers like me, which was helpful because we're not natural competitors. We were just there to compare what their approach is versus in Australia. And it was funny that the perception is that Australia is doing a lot, at least from the lawyers, but I guess with the numbers of blockchain companies, Crypto Valley across Switzerland and Liechtenstein, they've got, at latest counts, about 750 blockchain companies, and the top 50 are each worth about $400 million each, with, you know, the top 5 being unicorns. So that's just the contrast to the number of blockchain project teams that we've got here and their valuations.
Do you have any unicorns here?
And they're very small countries too.
Exactly.
Yeah.
So part of the policy frameworks and the regulatory measures that they've adopted have been blockchain friendly. So we have a lot to learn from those jurisdictions. And so even Lithuania, they've recently passed an act which recognises the ledger as the prime source of record for the issue and transfer of financial instruments, so shares, bonds, and the like. We may not need to make that kind of legislative change because we already have dematerialised or electronified shares, but it's just a sign of that they're learning and they want to make changes really to promote the legal certainty and probably grab some of that market share that the Crypto Valley has.
Yeah.
And I should just say, if you are interested, Austrade is running a delegation to Crypto Valley in January, February next year. And it has closed, but if you're really interested in going along, just message Catherine Heathcote. So chat to me afterwards if you need any help tracking her down. But that will be a fantastic delegation to learn and really get amongst it. So I guess one of the things that struck out for me at the OECD was the discussion with a couple of the central bank governors, and the theme of the discussion was prompted around what Libra, or Facebook, is doing with the Libra and Calibra project, but also the efforts with China, but even more broadly just monetary policy and this talk of us going into negative interest rate territory. Apologies, that's my baby in the background.
She agrees with you.
Yeah, tough times ahead. And I guess in the GFC of 2007, 2008, we saw the reduction of the cash rate by 3 or 4 percentage points. And at that time, we were kind of at the 10, 11, 12% and could afford to go down a couple of percentage points in terms of monetary policy. But there's criticisms that monetary policy isn't working as well as it was designed to, because we've now never recovered back to the likes of the 10, 11, 12. And with our RBA just cutting the interest rate, was it last week or earlier this week, to 0.75%, we could be going into negative interest rate territory. And so the challenges, whether the commercial, how the commercial banks will respond is a different thing, but we've seen in Denmark earlier this year, apparently is the world first negative mortgage where they're paying you to conduct your lending business with them, but with the corollary being that you pay to have your deposits stored at the bank. So with that context in mind, it doesn't make sense to store or hold cash as a store of value in a traditional commercial bank account. And with that as a macro trend across the global economy, then they look to crypto to say, well, yes, it's Bitcoin and cryptocurrencies like Bitcoin have been volatile and not a good store of value, but relative to negative interest rate territory, it actually makes more sense to keep some value with crypto. And this is not financial advice, but some of the trading bots that ask you to deposit a certain amount of Bitcoin and then guarantee that you'll always get that number of Bitcoin back. I mean, there's not a lot of contracts around it, so question the enforceability of that, but at least that's the promise. They then use that Bitcoin with the trading bot, and they're not just promising, but delivering on daily returns of upwards of 4%, which is better than any interest rate on a traditional bank account or a term deposit in Australia right now. So I guess when you look at those factors, there is some justification for storing cash by way of deposits in things that are not fiat and not run by commercial banks. So that might be one of the motivations for our central bank and other central banks to issue a CBDC or a central bank digital currency. But there are other motivations, and each country will have their different approaches, some of which are categorised into if you've got more of a retail market, so lots of mums and dads holding their cash at bank and having lending mortgage products and credit card products with the commercial banks, then from really kind of a surveillance perspective, but also efficiency, you might want to have a central bank digital currency to increase the speed, reliability and efficiency of payments because it's digitally native. Now our RBA is following sort of CBDCs closely, but is not keen to experiment and build its own digital Australian dollar yet. At least the public statement, billions of dollars in our new payments platform, and a digitally native dollar would only provide an incremental amount of efficiency further than what the NPP payments infrastructure will do.
So they need another reason, right?
That's right. So then if the retail portion of commercial bank customers isn't enough justification, like the efficiencies and cost savings is not enough, then you might also look to the wholesale institutional base. And they might be the ones that are relying on cross-border payments more regularly and of a larger size. So again, you want the ability to reduce transaction fees and frictions across those borders for those institutional clients that are moving a lot of money at any one time. And so again, a CBDC might facilitate. But if you're really just focusing on the efficiency for the commercial banks and their own processes, then we could even see each of the commercial banks have their own back-end token to manage these transfers, and it doesn't eventuate to needing a CBDC. But if there is any arbitrage or lack of ability for our regulators to monitor those blockchain backends, let's call them, then that might be a motivation for CBDCs to surveil what the commercial banks are doing. And in light of the Royal Commission, then maybe that's a motivating factor.
That's interesting.
So none of this comes out in the official public reports of the RBA, but some of the central bank governors in their presentations and in a particular panel were going through each of the motivations for their country. But when they got to Libra, this could be the biggest and most swift motivation for a number of countries to issue their own CBDC, because Facebook, with a captive user group of 2 billion users, is bigger than any one commercial bank or nation. And overnight, effectively, if a majority of their users, or even all of them, had a certain amount of Libra deposited into their Calibra wallets, you would have a global financial system. And it's on them to deposit, more Australian dollars to get more Libra. AUD won't be one of the basket of assets pegged, so question the value relative to the Australian dollar of transacting in Libra, but nonetheless, it's supposed to make online or digital environments more efficient and one-click shopping, effectively. But with effectively that monetary policy of the Facebook Libra coin and then Calibra wallet, at any one time there'll be a reserve held by the consortium. At the moment it's still a consortium, and with that reserve other derivatives can be entered into for the consortium to benefit, and again in a better position than any one bank or country can be in. That then switches to, if people see the value of Libra, and then it looks like more of a store of value than traditional fiat currencies, like for example they don't have to pay to keep their money in the bank, or the commercial banks are not paying them enough to have their lending associated with that bank. You could see Libra, because of the pure scale, be able to offer the lowest interest rate for a lending product or a credit card product, or the best positive interest rate to pay you to bank effectively or do your financial business with them. And so not only that, in being able to offer those sorts of products, just starting with deposits. If deposits start to sit with Facebook, a commercial bank traditionally relies on deposits to be able to lend. So this might be one motivating factor for the central bank to issue a CBDC, because in a global environment, there is speculation and I suppose assumptions that CBDCs will be considered premium currencies. And so one of the motivations might be that central bank might issue its own central bank digital currency. Initially we might see a run then out of Libra and to the CBDC, so it's our digital Australian dollar. That still doesn't help our commercial banks, because the deposits are held with the central bank, who doesn't want to take on the role of commercial banking functions and risk and monitoring of money laundering. Like, it just wants to deal with monetary policy in the most hands-off way it possibly can. So it might need to change its role and either inject money back into the commercial banks, or some other way of providing stimulus, or even employ the commercial bank workforce back to be able to manage those deposits at least, and credit card and lending products if need be. So
That's amazing.
yeah, it just switches what we know on its head. And with the Libra and Calibra projects expected to launch by mid next year, it's not a lot of time. And you're not seeing any public reports to this level of detail about all of these flow-on effects, which will happen in the short term if it goes ahead. And I think that regardless of whether it goes ahead or not, we're still going to have China, which has just announced this week that blockchain should be embraced, and cryptography laws have been passed already, and they've announced their digital currency, DCEP, central bank digital currency. So already there's going to be a first mover in the global market for other countries to watch closely, and hopefully fast follow. But I just fear that we don't have enough motivation yet, or factors being published to help us understand the motivations, because it's all very secret, hush, super confidential, so as not to create panic and the effect of runs away from commercial bank deposits, which would also put pressure on the financial system. So they're managing that. But we're not getting enough information in each sort of line of jobs to be able to plan appropriately. And that's one example of legal and policy strategic guidance that we should be seeing from our government, our Reserve Bank of Australia. But I get that they're in a really tough position, because I don't want to cause panic.
Are they doing research? What do you think?
They have got to be.
Yeah.
I think that central bankers around the world are talking to each other. Like, that's the sense that I got from the panel. And I refer to the OECD panel. All of those sessions are available online. You can go to the website and watch them. So that's a really good one. And the moderator was asking really tough questions, and each of them had given their sort of speech of what they could say and what they are researching and investigating. But then when the questions came, they all reverted back to, all we can do is fulfill our mandate, which is, you know, interest rate, that's the extent of the monetary policy, and observe and really watch.
Look, there probably isn't any role model for them. So this is innovation, and they're not used to decentralised business models and global collaboration. I imagine they're learning like we all are.
Yeah, and that's it. Like, it's still emerging, and nobody's really sure what's going to happen. And I've really talked you through some of the major assumptions or flow of events that could happen, but there's probably 10 different alternatives as well. And already we're seeing some of the Caribbean nations issue their own CBDCs. And of course, Venezuela has the Petro token, which is pegged to the price of a barrel of oil. But I just fear for Australia because, like I said, we don't have a strong motivation yet. And I think the US, whilst they seem quite hostile, the US dollar is going to be part of the basket of a Libra coin. So they stand to incidentally gain from the use of Libra token. And all of these US Congress inquiries and interviews and all of the research reports, it's actually allowing all of the government officials to learn about the technology and the potential of the technology. And we're not going through any sort of public inquiry that's filmed and that our government officials can buy into, which just the learning journey would be a great start for us.
It strikes me that there could be a perfect storm where the legitimacy of the commercial banks are just sort of irreparably damaged. So like the drift towards negative interest rates clearly creates a consumer incentive to shift to some other store of value, but combine that with, say, the collapse of a number of banks in a GFC style event again, and then you've also got this, then at that point, why
so
would
just
the
on that point though, the commercial bank deposits are effectively are guaranteed by the federal government.
Yeah.
But that guarantee could take the form of being fulfilled by a CBDC.
So if you're the central bank, why would you? What's the incentive to preserve the commercial banks in their current form?
I think that the only reason is that central banks don't want to take on all of the business functions of the commercial bank. That theme seems to be coming through very strongly across all countries.
Can I just make a comment on that? So
Yeah.
if you're issuing a CBDC, you wouldn't expect the central bank to be holding the deposits of the people that are in the form of CBDC. So they would either hold it themselves or deposit it with the bank as they're doing now to earn interest on it.
But they wouldn't. They would effectively hold it like I have my own Ethereum wallet.
Yeah, so they hold it in their own wallet. They wouldn't deposit it with the central bank.
It's more that the central bank is the issuer
Yes.
and is in control of really the use or the rights and obligations around that currency. Because as the issuer, they could tweak the protocol and change it at any one time. And then you don't have to rely on commercial banks passing on, interest rate positive or negative moves. It's all affected or controlled by the central bank entity.
Isn't it just a change of name? I mean, the central banks issue currency out of thin air now. There's no backing behind it.
No.
So if you want to talk about issuing, whether you're issuing fiat or issuing, they don't print many dollars. It's mainly ones and zeros on a computer screen. So what's the difference whether it's a digital currency or whether it's just another name for a fiat currency? Central banks are the problem, they're not the solution.
Valid point.
The money creation comes from the fractional reserve lending out of the commercial banks, though, right?
Well, yeah, but it's managed by the central banks. They're the ones that create the money, if you like, out of thin air. They have no backing for it, none at all. Their backing is guns that the government holds and puts in their head. You know, so.
But they're printing money. The rate at which they print money is in itself an exercise of inflation and deflation.
They're stealing from everybody, especially the people who've been prudent all their lives. So it's a system of theft, controlled government theft.
Well, and you speak of control, and that's, in decreasing levels of trust in society. Again, we go to decentralise.
For a very good reason. But people don't know what to do about it, and Australians are too gutless to do anything about it, actually.
Well, and because I think that our regulators will move slowly, or not quickly enough.
They're just bedwetters. They're not intelligent people. We don't have any intelligent people in government.
What do you really think?
So I really think.
I think that really the choice is going to be ours as to how we manage our money, and if we have more confidence in Libra, then I'm probably going to want to get paid in Bitcoin and convert it straight to Libra.
I hate Facebook. In fact, all social media is poor as far as I'm concerned. But I hate Libra. I probably disagree with it because it's a challenge to control central slavery systems. So Libra offers a bit more.
Yeah.
So my issue with Libra, and I'll come to you in just a second, I think that a lot of the US Congress questioning has not been the right kind of questioning. I think that if digital identity and privacy was at the heart of the Calibra wallet particularly, Facebook or the consortium wouldn't have access to all of the data, which would make them in the most position of power globally to offer financial products. If we had a true consumer data right, so digital identity protected at the heart of this ecosystem, then they wouldn't have as much power as they currently do under the proposals for how the Calibra wallet and financial services would be provided. But digital identity and self-sovereign identity, and this is going to Nick's domain now, is also a very contentious topic. And we've got our trusted digital identity framework in Australia, which is a federated model. So it's not syndicated and not controlled by the government. There's a process of getting accredited, but the barriers are so high that only Australia Post has been accredited.
Right.
And if they were to do anything wrong that breaks my trust, and I don't want to hold my digital identity through their service, I can't switch to any other Australian digital identity provider. And the Digital Transformation Agency that sort of administers the accreditation process, I actually posed to them in a question last week, would you take Facebook and Google through? Because we know that we've got a sort of identity verification that is global. And they just shuddered at the thought of doing that. But there are no real enterprise grade competitors to the AusPost that want to go or that publicly have said that they want to go through this process. It's left to startups to go to the extreme cost and effort to be accredited. And if only the US Congress were asking questions or implementing legal policy that required digital identity to be at the heart of this project, or even a transition to self-sovereign identity, that would be, I think, curing a lot of the issues that stem from access to data and the position of power that would come from that from any one entity.
It would certainly help, but it doesn't solve the problem. Libra is really not a blockchain. I mean, it's a centralised database, essentially.
Initially.
So it's, yeah. So and it'd be tough to trust them in any way.
But
they've lost our trust.
You can't trust government with anything.
No.
So,
well, also, if we operate it on a syndicated model, then that's a huge honeypot for attack also. So it's either got to be federated, in which case, all of the 10 accredited providers sort of spread the efforts of hackers, or truly decentralised in a self-sovereign model, so that in the true value proposition of decentralised instances of blockchain, we have no central point of attack. I'll just stop there and I'll come to your question.
It was related to the federated part.
Yeah.
Simply because Trump has told Zuckerberg that he can do Libra as long as it is pegged with whatever the US Federal Reserve wants. So as long as they come to some kind of agreement there. But my question was, how does that relate to the rest of the cryptocurrencies that are out there?
In terms of their value, or
if it's not on a blockchain, if it's federated out, how is that kind of going to affect the rest of the cryptocurrencies, do you think?
if I understand the question correctly, and ask me again if I haven't answered it, other cryptocurrencies, other stable coins are already pegged to the US dollar. Question the effective or non-effectiveness of that, but it's still helpful for the US economy for a digital currency to be pegged to their traditional currency. There are no real valuation models behind it, but I'm so sorry. But just for the US dollar being included in the basket, the assumptions are that it will be helpful for that economy, and the AUD not being included is unhelpful as the assumption, but it's all yet to be proven. Yeah.
On the consortium, the Libra consortium's reducing each week. The companies are leaving, but it was interesting that Visa MasterCard left, because MasterCard has over 100 blockchain patents out there, and once I saw that they'd left the consortium, that tells me the whole blockchain trustworthiness, they worked out it's not going to be there. So I suspect that's a major reason why they left.
Well, I think there's probably a couple of layers to why they joined and then why they've left. If the project really takes off, MasterCard becomes redundant. You don't need a payment provider like that because it's digitally native payments. So it's in their interests to follow and join a project, and their profit model would transition to them taking a node and receiving block rewards in that fashion, or other transaction fees, depending on the financial services products that they're involved in.
And they would have access to all that data that you were talking about.
Yes. So huge incentives on the one hand to be part of the consortium and deeply understand where the project is going from a strategic perspective, and really how long of a life they have left. But I mean, MasterCard and Visa could also become redundant if each country has its own CBDC, which means that payments are purely digitally native. There's just so many layers of factors. But then I think that they might leave because, at least in the latest interview Mark Zuckerberg has given, he said that they would not proceed unless they have been given regulatory approval by the US. Now that could drag out.
That's easy. You bribe the right
Yeah, that's right. That doesn't mean anything. That's just saying the right
nonsense.
things.
Well, we've already heard that Trump wants to approve it as well, on a certain condition, but
Trump hasn't said anything actually about it yet. It's senators who I have no trust and confidence in have said that, but not Trump. I wait until I hear Trump say it as to whether I believe it.
well, and so they could be off forming their own consortium covertly. They would probably have a lot of interest in the likes of Ripple or even the SWIFT system that's been...
Ripple's really getting a lot of their interest, you know.
So, and I guess whether the blockchain applications are more centralised or more foundationally decentralised, they're still offering what would seem like more efficient models of money transfer and payments, which is the Visa and MasterCard domain. So, as a strategic perspective, they've got to be watching things closely. So,
very interesting, if anything.
But it's hard to come up with any clear direction or answers because you don't really know how the economy is going to turn, which country is going to be most affected first, what are the flow-on effects, and then what are the impacts with trade.
It's bad when you can't predict stuff.
Yeah.
It's good when you can control minds.
Is there, I mean, Oh, sorry.
So I'm just saying, going back to the mind controls, like the conformists, that they've got everyone now that don't object to anything.
Yeah, well, like sovereignty. You know, there is value and power in a nation's sovereignty, and they're all fighting hard to protect that. And we're already seeing that with the digital platforms inquiries across a number of jurisdictions, because the likes of Apple and Google and Facebook have become too powerful, and we've let them become so. And that inquiry right now is, well, we didn't have the force would change and how Facebook would have 2 billion global users and get to this position. But if we could do that again, and then blockchain is the sufferer of this, how can we come up with best practice policy so as not to give any one country or one blockchain the power? And so the officials, it would seem, think that they need to come up with the best policy solutions now to avoid the mistakes of the internet and digital platforms, and that might be the stopper, or at least a delayer of the implementation of these truly disruptive global financial systems.
So hard to do that.
Well, Bitcoin's already done it.
Yeah, it's a good role model.
Yeah, and I think that other blockchain projects, particularly decentralized ones, and we're already seeing it, they will copy the process of submitting a white paper under a pseudonym, and the code is then picked up and implemented, and then miners join, download the protocol and participate in the network. And if there's no way of ever tracking the true author of the white paper and the protocol, then we have no real person to really attach fiduciary or legal obligations to the protocol.
A proper DAO.
That's right. So then again, the question to our policymakers is, and this is a really tough one because the policymakers don't feel like decentralisation is an important enough topic yet. But we're seeing places like Vermont implement the BBLLC, the blockchain-based limited liability company, which is really a legal wrapper that gives legal certainty to the participants, which includes you and I, which might invest in the particular token, the nodes, as well as other coders that have contributed the original or updates codes. That legal wrapper is effectively a limited liability and a source of legal recognition that we don't otherwise have with pseudonymously submitted white papers and protocols, which, there's at least 10 examples of that same process being followed with decentralised instances of blockchain technology being out there. Sorry, am I going on a tangent?
No, this is great. No, what I was going to do is just give somebody else a chance to ask a question if there was anybody quietly.
Yes. Just now you mentioned about the challenges of the decentralization. I think in the global scale, people are quite aware of, the transitioning period that we are going through in terms of the sharing economy. That's why there's a lot of difference, not just in terms of this cryptocurrency that's coming up, but it's in a lot of different avenues as well. That they form like a particular roadmap or plan from the panel discussion that you have attended? Like how do they plan to implement this in a clear roadmap or milestones or anything?
I'd say there is no alignment between countries, nor has the OECD come up with a model yet. They may start a program of work to identify the issues in order of priority to issue OECD model guidance, but certainly at least a year away. I like the Swiss model, or I should say blockchain companies that have originated in Switzerland, and Melon Protocol is my favourite. It raised about $3 million in an ICO in 2017, spent 2 years building its version 1 protocol and suite of smart contracts for an investment management DAO, basically, and it transitioned to a decentralised model of governance in February this year. And that model of governance involved effectively 2 governance councils, one that is really comprised of technical skills, so across cybersecurity, blockchain, traditional tech, and that's really that technical heavy governance board. But then there is another part which is made up of the members or the users, so investment managers that want to create their own investment fund using the suite of smart contracts. And it's compliance by design. So in the way that you step through the smart contracts, you set your investment parameters and your risk parameters, and so that by design there can be no breach in the fund rules.
Yes.
Now that's kind of limited to the investment fund investments. It doesn't go to the extent of compliance with the local financial services laws and regulations.
Yeah.
So now that they're operating with a decentralised model of governance, John, as a financial services lawyer, could submit a proposal to the network to say, I want to create a version of the suite of smart contracts that is compliant with Australian financial services laws and regulations. This will cost me X.
Yes.
John could give probably a figure, and it's then submitted to the Governance Council to vote. And if that is voted up, then the funds are transferred to his wallet in tokens. So the law firm would have to be able to accept cryptocurrency as a payment, which not a lot of law firms do yet. But then, through the course of work, John would have to deliver that suite of smart contracts, and then we would have smart legal contracts in Australia for fund management, which would extend beyond just investment funds, but we could use it in our Australian superannuation industry. The banks could use it. You'd think about all of the applications, but also as part of that governance model is the tokenomics and the block rewards. So to incentivise the Governance Council to spend the appropriate amount of time considering the proposals and being involved in the network, they are set a certain portion of each block rewards in the Melon token. And so that's the incentive mechanism for them. Obviously, the nodes are rewarded as part of the block rewards. And there is a bit of inflation built into it, but it's beyond me to explain how all that works. But what I really love is in the Melon white paper, they actually have had an attempt at future thought of the market. And they realise that there will be healthy competition with other like blockchain applications. And they've even anticipated technically the merging of two blockchains and tokens to become, or to eventually form the one effectively monopoly or one best blockchain for funds and investment management.
Like a company merger, DAO merger.
Yeah, and so that kind of forethought is coming from a blockchain company, not policymakers, not government, and all of that kind of thought is happening in Switzerland, not here.
Yeah, but I think tapping into what you have said, that Australia has set up the digital identity quite well, honestly, comparing to quite a lot of countries in the world. So at least we have a good foundation to start. And then if in the panel discussion that you have attended in the OECD, they set up a good framework for all this layer discussion, set up the policy and regulation properly, then this transformational transition can happen quicker. And then for developed country like us, it will be good for transparency and also innovative. And then for poorer country, it could bring a lot more benefit in terms of their banking and financial institution as well.
Agree?
I see the whole big picture, but it's a transition. Always when we go through transition, a lot of background works need to happen.
Well, and I'd say that decentralisation has been completely deprioritised because there's not enough empirical evidence right now of those pseudonymous actors in Australia or Australians and Australian businesses engaging with Ethereum, for example, or even just DeFi applications or trading bots, really, that are trading cryptocurrencies. And I have been negotiating with the ATO for nearly 2 years now on the legal and tax treatment of the Ethereum Classic hard fork. The current ATO view, I think, effectively endorses code is law because they treat the ETC chain as the original chain because it underwent no software upgrade. I feel that what we now know as the Ethereum chain, so that was the copy and rollback code, and the ticker followed that code. I think that should be the continuation of the original chain because what it effectively did, although not by our code of law, was that it reinstated the parties to the position right before the hack, which was the social contract at least that they each entered into, the right to hold their tokens and value and invest in the DAO without it being stolen and not rectified. But of course, code is law and code of law are very controversial. And the ATO and Treasury are very aware of that. I think it's an effective endorsement of code is law, which is a dangerous position for Australia to be in. But through the course of legal process, we need to demonstrate through our legal submissions if traditional legal principles can be interpreted, that what really happened with the ETH chain was effectively an order of rectification of the parties. But our contractual law principles might not extend that far because we don't have a counterparty truly in a decentralised environment. We may be able to identify the node that verified the block or blocks, but even attaching liability to a node doesn't really stack up, nor can you really rely on national legal principles. You might be getting into international arbitration. So there's all of those complexities that if I want to invest in Ethereum or in the DAO or like cryptocurrencies and investment product, that's at my own risk.
So I'm going to try and lift us out of this a little bit.
Sorry.
No, this is fantastic. The question I posed earlier was around, will regulation save the banks? So I'm going to try and, I don't know, I'll start speaking, I'll see where we end up. One of the conversations we've been having away from the word decentralisation and something is starting to crystallise, which is we all talk about second wave automation as being autonomous cars and something in the future, but it seems to me that this is potentially the first, probably one of the first big waves of automation entering the society. So to the comments you were making earlier, if we get open standards for legal contracts, then that automates away huge portions of cities. If currencies, if we get digitally native currencies, the commercial banks' role in the economy today is questionable. So maybe two questions to try to steer the conversation into a user story type conversation. Projecting ourselves out 10 or 20 years into the future, are there some things that we can be certain about? Like, will the banks still exist? Or will MasterCard be? Yeah. And throw that question to the audience as well.
Yeah. Did you say 10 years?
Whatever, past, beyond this sort of invisible barrier that seems to be in front of us right now.
I'm only looking to 2020. I think there's going to be a significant amount of change in the next 12 and 24 months, and I kind of want to see how we get through that period to then predict the next 2 years.
Yeah, cool. Yeah. Does anyone else want to?
Cash will not exist.
Yeah. Digital cash.
Sounds reasonable.
Yeah.
Physical cash.
Yeah.
Notes and coins will not exist.
Yeah. That seems reasonable.
But we're just such a small group of people in the crypto environment, in the tech, all the advances in tech. And there's this huge tidal wave of change coming. But the vast majority of people have no idea. They're too busy.
There wasn't a video on Facebook.
Well,
Yeah, go to
yes.
football, yeah.
Go to football, but also just doing day-to-day life, and it's too big and too scary, and there's a little bit of headless sad.
Well, it'll just depend on whether the Kardashians take it
All of that, I mean, some of it's yes, like people being seduced by social media, blah, blah, blah. But whatever the reason, there's these huge changes, and you're saying, Trump.
I can't even get across them. Like,
we can't get across them, and I've been in tech for a long time.
yeah.
But I'm in health, and I can tell you, people are in their head, they're not seeing anything. Their frontal lobe's switched off. They're in fight or flight in the back of the head.
Yes.
But I think it comes back to motivation. If the banks are failing, people will learn pretty quickly about what the alternative is.
Yeah, but they would have to what he'd be able to stand at city.
Or just one at a time.
No, there are examples around the world, like people watching Venezuela saw what the government did with their money, and people watched what it happened in Greece. The banks took people's money from them out of their bank accounts and didn't give it back, right? So people are smart enough to see you can't trust the government, you can't trust banks. So Venezuela, everyone operates in Bitcoin because the money went from this is worth $10 today, this is worth 0.01 cent today. So there are examples happening in the world that are waking people up for sure. And China did a good thing with the president saying, hey, blockchain, everybody, get to it. He made that very strong. Within 48 hours on WeChat, after President Xi made that announcement, 9 million Chinese on WeChat looked up blockchain. Now imagine...
That's not many in China.
Imagine if our Prime Minister said to Australians, hey, there's something called blockchain, everyone get educated about it, everyone learn about it, let's teach it in school. We're teaching kids to program in school. Let's start teaching them about blockchain. Imagine if that happened. Just a simple statement like that would make an incredible change in Australia. Investment would go up, all our startups might get some funding, you know? People might realise, we need blockchain projects going.
They don't associate good food with cancer either. Or poor food with cancer.
No.
So it's like...
The change is going to come whether the people think about it or not.
But
by next year, this economy is going to collapse.
No.
And people are going to wonder what the hell they're doing.
So we've got a couple of questions. I might jump in.
How do we sell that? And obviously, blockchain needs more funding. The startups need funding. We need to get with the program basically. So what do we do?
Well,
that will help us sell that?
And before I go to that question, I think the one thing that I think certain over the next few years is just everybody's going to pursue convenience. And so we talked a lot about consumer convenience and or like store value. We haven't talked a lot about just global e-commerce businesses are going to want to integrate payment solutions in more convenient ways. And so I think this pursuit of convenience will ultimately drive people to cheaper and cheaper payment solutions, which I don't know. Perhaps, who knows? So in terms of startups, I think that's all you can do as a startup, and there's an element of litmus tests that you need to go through. So you can't, and then you get into a conversation around why is everyone leaving Australia for the most part and going to Silicon Valley. So it runs a bit deeper, I guess. But I think that's why China probably has jumped onto it more quicker, because if they are pursuing convenience, then they want to be first and then make sure they at least they can still pull the puppet strings.
They already have it with WeChat, they've had it for a long time. People just live on WeChat. All of their financial payments.
Everything through WeChat.
Yes.
Everything.
So consumers, when it's that easy, then why would consumers move through? And then, I'm not going to get on
So can I ask on that topic, with China's sort of implementation of blockchain, are they going about this for the social good? I mean, presumably not. So is there a chance that we could sort of find ourselves implementing a sort of a blockchain that actually increased ubiquitous surveillance and government control, and because that's clearly what China's going to try and do with it.
Well, that's what Facebook already does.
But hasn't China done something where you've got to
Social credit.
Do you want to bring Leo in?
you actually have to swear allegiance to the party.
Yeah, I was going to stop at 8:30.
The party members have to swear allegiance.
But something else has come out. Somehow the party interpreter.
But there are great blockchain projects out in China that encourage self-sovereignty. So Elastos is a brilliant example. Neo and Ontology are other great blockchain projects out of China that look like they're for social good.
We've got a question at the front, and I nearly made tinfoil hats for us all today, so if you wanted to say really something crazy, you'd put it on and then just say it. But my tinfoil hat response before we throw to the question would be, is there an element of it, is this an extension of the economic war that's sort of unfolding in the world right now? Calibra might actually go after the unbanked first, which aren't in the financial system, and then you've got like a currency war that's going to unfold. Which currency is more convenient and powerful?
We've got 2 minutes.
And then there's stable coins, which we haven't talked about as well.
Yep.
Throw the question at the front. You've been waiting a while.
Yeah. Oh, I just put a thought out there about the future rather than asking a question, just to answer your question.
Yeah.
So, I don't know, it feels like 1999. So, and I remember I helped implement GST, not for Australia, but for some companies in 2000. So, I think the government's going to take, there's a lot of regulation, there's a lot of people working in banks and so forth. So from a government policy perspective, you're not going to do people out of a job in a rapid way. And there's a lot of stuff that, even if we decided to do something today, there's a lot of stuff to get sorted out. So it's going to probably take 10 years. So best case scenario is, yes, we may go to a digital transformation of currencies in 10 years' time. And over the next few years we'll see overseas examples, and people will learn from that, and hopefully a few things will tighten up a bit, and then there'll be some sort of decision, and then there'll be implementation, and it'll probably be 10 years.
Yeah.
So maybe in 10 years' time we'll be all...
Was that 10 years from 1999?
Yeah, so 2030. 2030.
I'm going to use that as a good opportunity to close the formal part of the night. We've got the third speaker at the back that's ready to say his piece.
I'm so sorry. I might just excuse myself.
I'm going to say really a big thank you to Joni. And,
thank you.